Hello traders and welcome to the wave count service today, November the 25. Let's start with the Euro USD. I would like to work on the weekly chart to understand better the market behavior that we are seeing during this week. Let me hide some of these waves, and I would like to focus on this structure that the close today of the weekly candle. It's going to be important to understand the behavior for the upcoming week. The price has been consolidating, and one of the questions that we need to solve is if this leg down is a D wave as we are expecting, or if the B wave ended on the left. So that's something that we need to find out on lower time frames, but we believe that the close of the candle this week is going to be important to understand what is going to happen next. First of all, when we analyze the current price action, we can see a star. It seems to be like a doji or a spinning bottom candle formation, that if the candle closes like that, or actually if it's able to close a little bit higher to close inside the triangle zone, we can say that the price couldn't break out the support area. And in that case, the upcoming week, we will look for a green candle that will be able to close at least 50% of the previous red candle. That formation will be a morning star that is a powerful reversal. At that moment, we will confirm that this was the D wave and the price is likely to go again to the upper triangle area around the 113.50, 114 area, but we don't have that validation yet. So be careful, because the price can add momentum and just break out the triangle line. We need to be careful with the euro. But inside, in order to explain why we're thinking that this leg down is likely to be a corrective wave, we can visit the lower time frames. Let's go to the 4-hour chart. On the 4-hour chart, as you know, the markets are fractal, and we can start finding out what is happening with the leg down. So here we are on the 4-hour chart. This is the whole move down. The last leg has a lot of momentum, but when we focus on this leg down, we need to find out if that is a corrective wave or not. So one of the ways that we validate those ideas is by going to the hourly chart. According to the Elliott wave theory, when you have an impulse, it looks like a 1, 2, 3, 4, 5. The wave 3 is the strongest, is the steepest, and can't be the shortest. In this case, the steepest move, just with price action without applying any other instrument, visually, the steepest leg is the first one. And if we compare, the oscillator is losing momentum, the price with each new low is losing momentum. So the steepest leg was the first one. Then we have new lows, but of course the slope is lesser than the previous leg down, and it's losing momentum. As you can see, here is almost flat. So this can't be an Elliott wave impulse. It doesn't accomplish any of the rules. That is why we see this as a corrective wave, and that helps us to understand better the market behavior inside this corrective wave. Another important detail is that the price started to build a head and shoulders bottom. So here will be the neckline, waiting for a small retrace, and then the breakout of the trend line. From the hourly chart, we can start validating with that head and shoulders bottom. Plus, here is the trend line that we have been following this week for this last leg of the corrective. And as we can see, the price has started to break out the trend line. It's starting to change the bearish trend to something different. It could be a consolidation or a reversal. So we need to validate it step by step. But it seems that we are at the bottom of the market according to the technical indicators. What about the pound? For the pound, has been one of our favorite setups this week. We have the price ending a wave X and then starting a new cycle down. Our target on the 4-hour chart is the previous low area where the wave Y ended after the Brexit. The reason why we're thinking the price is likely to make a new low before reversing is this strong momentum that were added during the move down. So that's why we're looking at this as a flag formation, and the price is above the trend line. One of the validations that we are looking for the upcoming week is the breakout of that trend line, but the faster trend line Insight already showed the first signal, plus we have been following this head and shoulders top formation, breakout, pullback, and here comes the continuation. So let's look for that target at the low of the 119.81 area. We have a lot of room, and the validation of the breakout of the channel, it's important to follow the move down. While the Aussie is building a corrective wave as well, yesterday and the day before yesterday, it tried to move a little bit lower. It went from the 74.45 area to the 73.64, but during the retrace, it couldn't hold below the high, the resistance area, and it created a new high. So that's why we're calling this a double corrective sequence. And we believe that it's going to end soon. The way to validate, always validation is key when navigating the markets by using Elliott wave, would be that this is a bearish flag. Look at all this momentum that the price has to the downside. So this is the bearish flag, and the breakout will start activating the previous low targets, the 73 area. And then the market will be divergent once it makes a new low. So after that, we look for reversal patterns. Dollar yen, pretty strong, the move on the dollar yen. On the 4-hour chart, we can see this move up pretty strong. But when we break it down, the awesome oscillator and the analysis, we can see something similar as the euro. The steepest leg was at the beginning. When this happens, just with visually and also with the oscillator, we can see that this is not an impulse. The impulse is 1, 2, 3, 4, 5. The steepest, wave 3. This is something different. So that's why we believe this is a corrective wave. Anyway, has more room to the upside, because during this week, this awesome oscillator was pretty strong, and that's why we believe it's going to make a wave 4 and then a continuation up for the wave 5. Once we start seeing the new divergence, we will look for a market reversal or a retrace. We will see, but for now we can focus for the upcoming week on this wave 4. Wait a little bit more until the wave 4 retraces a little bit more. Have your trend line, and at the breakout will be the continuation, and the price target for the move up will be the 114 area. Dollar CAD is working nicely this week. We have the target at the high of the 135.80-90 area. The price built the B wave. This is a nice rejection candle, long shadow here for the end of B. We believe the price is getting ready for the leg up to complete the pattern. And the New Zealand is pretty powerful today. We are looking for a 5-wave sequence, the last leg down. So here we have 1, 2, 3. As you can see, 4 got inside the price territory of 1, but the invalidation is at the end of 2. And this is an ending diagonal wave for a C wave. Once we have the breakout of this continuation, we can activate the previous low But anyway, be careful because we are close to the end of the move. This is showing a lot of divergence. So once the wave X it's over, we believe next week, we expect next week, then the price will start trending higher. What about the stock indices, like the S&P? The S&P did, after the presidential elections, a strong leg up, then a quick corrective wave, and at that moment we start forecasting the move up. Our first target was the 2213, where the price is pretty close, and the next target the 2231 area. The price did the B wave and started to move up pretty choppy and sideways. So for the upcoming week, we are expecting another leg up to complete the C wave. Clearly, this is not an impulse, this is a corrective wave, and we are seeing divergence now between the A and the C. Once we have the change of the direction of the price just by using this trend line, any candle closing below the trend line making a pullback and a 1, 2, 3 pattern, for example, will start the leg down. What about the Nasdaq? Nasdaq is complex, is different to the others. While the S&P, while Dow were able to create new highs, Nasdaq couldn't. Actually, this week we have been seeing the Nasdaq going down while the S&P goes up and the Dow goes up. So going on the opposite directions on lower time frames. So while the S&P, the Dow, the Russell did new highs, the Nasdaq couldn't. So be careful with the Nasdaq. We are seeing this like a kind of a double top formation because it failed to break out that resistance, but looking for a continuation down. And the Dow was our preferred setup for the week after we found at the beginning of the week this beautiful Elliott wave triangle. It completed the triangle and it started trending up, making new record highs. Dow was our best setup, our preferred setup, and was showing less choppiness than the S&P, but also there is a divergence, as you can see. So that means that something is going to happen soon and the price needs to retrace. German DAX, we really like the German DAX, and we have been waiting all the week to find the reversal after 2. We are dealing with this as a head and shoulder stop for the wave 2. So here came the first attempt to validate, but it failed because it didn't close below the neckline. Second one failed, didn't close below the neckline, and right there is in that tight range. So at the breakout of that neckline, we can start activating our bearish targets. The oil has been fantastic, harmonic, and the price seems that completed the B wave. So let's play around with some Fibos. It went to the 61.8, almost the 78.6. But something that we really like is that we have the equality setup. The wave, if we measure the wave A orange and then we project that to the C orange, we can see that precisely there at the 100% the price reacted with a nice evening star. That's a beautiful evening star at the 100%. So as you can see, we have a green candle, a star candle, seems like a doji, a small body candle, and a red candle closing below the 50% of the previous green candle. That's the reversal pattern right there. And then it started to move down. So it seems that the B wave, it's over. We can start activating at the breakout of the 1, 2, 3 reversal pattern at the 47.14, the previous low again of the 42 area. Plus, don't forget always to have your trend line. So this is the trend line for the corrective, and the price already did the breakout. What about gold? Gold is building a wave 4. We are expecting and projecting the wave 4 as a flat. A, B, and C. The price will continue after that. It's a strong bearish trend. So once the wave 4 is over, we can follow the move down for the wave 5. And the Russell is similar to the others, to the S&P, to the Dow with that divergence. And the B wave here on the Russell was too small. We have like a better corrective on the Dow, a better corrective on the S&P, but the corrective on the Russell was too small, and then the market, as the others, really choppy, losing momentum. So we are looking to find the end of this corrective move up in order to activate the bearish targets. So it's almost the same on all the stock market indices. That is the report for today. Thank you for your time. Have a happy Thanksgiving holiday and a great weekend. I'll see you soon. Take care. Bye-bye.